Is it Keir, right?
Yeah, button your shirt. Make sure you look good for the cameras.
Yeah, we're all set. And we're live on LinkedIn, Facebook, and YouTube. Epic Lunch and Learn, episode 45. I am your host, Dante Royster, author, mortgage broker, and crazy world that I'm in the mortgage space. I am here today with Vince Bertocchini and is it Keir Young?
Yes, absolutely.
All right. I was nervous about that. I was like, man, is it Keir? But let's talk about credit today. You know, that's the 5-letter word that decides whether you get the keys, the deal, or, you know, you got the door slammed in your face. So, you know, I think credit is very important, you know, and giving people opportunities is all, you know, it's basically what we're all about. And today, you know, I have some great guests on so we can, you know, really talk about this conversation and really open some eyes and, you know, hopefully open up some opportunities for people out there on things they might be missing, things that they can work on and obviously come together with. So definitely, Keir, why don't you introduce yourself to our audience?
Okay, good afternoon. My name is Keir, and I want to give it back to you. Thank you for inviting me on your platform. It's always awesome to network with people. I'm from Illinois as well, in Chicago, and I help clients with financial literacy. I like to be a resource for the community, people in my area and individuals, because it was something that I learned just recently. So I wanted to be able to share with others as well.
That's awesome. Yeah, financial literacy. Once you really said that to me, I mean that you know that really hits home with me. It sometimes it feels like a maze. You know, mortgages, credit. It's all a maze. It's not information that was necessarily passed down from generation to generation, and so it's an opportunity for us to really if once we learn it and someone we got fortunate enough someone taught us, and now we get the opportunity to now pass that information on to someone else. And obviously that, helps out the community, helps out, just people and overall. And one thing I like to say is, we're changing the middle class slowly but surely. So with that being said, we're always told cash is king, but nobody mentions, building credit. And can you talk about how credit is important? How do you see it as being important?
So I look at it like a lot of people look at credit as a number, right? But it's very important. It's something that will allow you to get further in life, right? A good credit score helps you achieve credit, security, finances, a home, a car. Sometimes you can't even get a job if you don't have a good credit score. But people don't understand that if you don't know the background, if you don't have a background in finances, you don't know these things, right? Exactly. So it's very important that you understand that it's not just a number. Cash is king, but credit holds conversations too. It gets you in rooms and places that you never thought you would be in.
Exactly. What's interesting, Vince, I looked this up because I was curious on what today's average credit score is. You have any guess?
Top of my head, I'm going to say 675, but it's probably a tad higher.
715, man. 715.
What?
Yeah, the average credit score, and it's funny because obviously in metropolitan areas, now I don't have stats to back this up, but I always feel like in metropolitan areas, bigger population sizes, there is a propensity where, we have struggling credit, whether you're in Atlanta, Georgia, you're in Chicago, Illinois, sometimes, who you're around, you're like, oh my gosh. And so the average credit score, but, if you're thinking of Omaha, Nebraska, Boise, Idaho. There's other people that don't have those issues and other people that have that credit as well. So that's a situation that does make a difference.
I'm going to wheel that back a little bit. That increase in credit score took our guests by surprise. And I want to add 2 comments to maybe why that score has increased. Affordability.
Yeah, makes sense.
Right? And the average first-time home buyer is now 38 years old.
Yeah.
I'm sure if we went back and looked at what that was in 2020, we were probably under 700. And I'm getting to that point of, as we've mentioned before on the show, you didn't earn the rate, you just got the rate. Meaning
Correct.
You're in that FHA loan at a 3.5%. But now that you got into it, you've improved that lower credit score, which is kind of over time has maybe brought this average up. Not so much on the latter point, but more to the first 2 points as to why I think we're in the 700s.
It makes sense.
Obviously scores range from 850 being the highest to 450 being the lowest. The stats show from experience only 1.76% of U.S. consumers have a perfect FICO credit score of 850. That means perfection is rare, but it's possible, but it's very rare. Obviously, there's probably 340 million people in the United States. We can probably say 170 million of them are actually working, working public. So, out of that 170, that's what I would kind of say is that, there's only 1.76 to round it up to 2% are perfect score. So a lot of it, like to your point is this is not taught in the school system, right? Our school system to some degree has failed us on how to prepare to be a living, breathing, functional adult. There is no class right now in that.
There should be.
I agree.
Right? It shouldn't be life lessons that give you the education, but sometimes those life lessons give you the best education.
True.
Yeah, and they taught you how to balance a checkbook, but they didn't tell you how to keep up with the money, get the money to be able to balance. If you don't have the money, how can you balance?
Yeah,
correct. And how do you know how to make money? The system overall really encourages employee mindsets and not really entrepreneurial endeavors. So you're always working for somebody per se and not really starting your own, and that can always set you back until you have to. You're fortunate enough to rub the right elbows and meet the right people to expand your mind of what's possible and not be so limited. Because limited thinking, I think, has a lot to do with, credit challenges that people have as well.
Exactly. The mindset, what they were taught growing up brings up the generations. What you are taught, what your parents were taught, they taught it to you. And that's only what they knew. But now that you know better, you have to pass it down to your generation, your children.
Yeah, that's so hard. It's a concept that I've been saying this year about if you know better, do better. And and sometimes I'm a hypocrite on that because I like a good hamburger, I like a good cheeseburger, knowing that it's not good for me. So it's easier said than done. The practicality of actually applying it in your day in, day out, requires the discipline and the determination of wanting something better for sure. I have a quick question, Keir. Did you have someone else coming on here with us?
No.
Okay. All right, no worries. So then also too, credit is broken down in different percentages. And we know that from the mortgage business. So 35% of your credit score is based on payment history. And that's the ability of you actually paying down debts, and obviously ratios from let's say your total limit to actually the total balance. They generally want you to be under 30%. That's kind of the magic number. So credit utilization is important too. Can you touch upon some of that?
Yes. So the payment history is very important because it shows the creditors that you are able to pay bills on time, right? Make payments on purchases that you purchase. And the utilization is like 30% of what your creditors give you as far as debt. If you keep that under, that lets them know that you are able to balance whatever credit is given to you, right? And it's important because it shows you how to manage not just your credit, but your life as well. If you are able to make payments on time, now you're able to make appointments on time, right? If you're able to balance out your credit utilization, now you're able to balance out, okay, I got all these tasks, let me put what's priority first.
Exactly. Yeah. And so sometimes that urban myth, when I'm talking to folks, they're like, well, I don't want you to pull my credit. I don't want
Right.
you to pull my credit because they're so fearful of, the credit, being pulled. But that's only 10% of the credit score. The
Mhm.
bigger impact is actually, to your point, the payment history, what type of credit that you have, and how much are you using it. And so I always I feel like, do the service of explaining, like, it's better to have a $20,000 credit limit, and then that your let's say your percentage that you've used is, let's say you have a $20,000 credit card. You're better off having a $5,000 balance than you are having a zero credit, or zero credit card with a limit of 350,
Mhm.
$350. So you want to look to expand, because they want to see how responsible you are with finances. And
Exactly.
but there's such a fear that I know people have out there about, I don't want to touch it. I
Mhm.
saw what happened to my mom, or I saw what happened to my aunt, and I don't even want to touch it. What do you say to those people?
I say to listen to the concept of what your parents have benefit from it, from having a credit card, but also it's a mindset thing. Just because your parents did something doesn't mean you have to do it, right? You can get a credit card with that amount and say, okay, I'm going to be different. Like when you have kids, you say, I'm going to raise my kids different, right? That's how you break generational curses, by doing things differently. So your parents say, oh, I got a credit card, I maxed it out because I used it for Christmas and now I'm in debt. You don't have to do that. You can get a credit card and say, okay, I'm going to use it for this only, and then I'm gonna pay it back on time, and then use it that way, so that you don't go into that bad money management mindset. I say
Yeah.
it's a mindset thing because people feel like they have to continue doing something that somebody else did, and that's not true.
I also feel like it's an economic issue as well.
Mhm.
And to your point, Vince, in 2024, states like Minnesota had averages in the low 740s for credit scores. And so obviously, Colorado is also up there with high credit scores. And so generally, when we're dealing with deals in Minnesota, Colorado, we'll see more conventional or jumbo options are available. It's limited options. Obviously, there's people that need FHA and stuff like that, but it's just, you don't see it as common. And then, but in Mississippi, last year in Mississippi, which is obviously the lowest, what is it, the lowest annual income,
Mhm.
per capita, their average credit score is 680. And so
Mhm.
I think there's a trend there that we say, with lower income households, we have lower credit because they're utilizing more of the credit to offset the money that they're not receiving. And so, and there might be a lack of education per se. So that could be a major issue, that's really going on, that once again, we're going to have to self-study. I thought it was funny, and I don't know if you had the same experience. When I graduated college, I was happy and I said, yes, it's over.
Yeah, you thought it was. Then you saw the credit
Right.
card bills you got, right?
Hey,
You
Yeah,
thought the student loan debt.
I'm glad
man.
you went there, man, because I was going to try and talk about that, right? Like, I mean, I went away to school, right? I went to Arizona State. You walk to campus, there was a credit card vendor, right? All you had to do was sign up, and there you go. You get a credit card in the mail for the next semester, right? You're like, cool, parents don't need to know about this. It's my side account. It's my side money. It is what it is, right? Come back from Christmas break. Oh, I need a new one. There's another one, right? And it was just credit at will, right? And then at the end, you're like, oh, wait a minute. Hold on. Yeah, I balance transferred as much as I could. I got zero interest on this one. I got this over here. Oh, wait a minute. It's over. The credit store's closed because I'm not walking on campus no more because I graduated. What am I going to do, right? And here we
Exactly.
are. Now we got to figure out how to pay the bills.
Exactly.
Yes. Yeah. And also
And they
too,
still didn't teach you financial literacy when you graduated from college. It still wasn't done.
well,
Should
that's the whole
should
point.
do it in high school when you're preparing for college, because that's when real life starts. You
Correct.
Correct.
know.
Yeah, it's really a shame as we get older and I look back and just like some of the lessons I just haven't learned. and that I had to learn, going through it. And yeah, I mean, sometimes the pain or the bump in your head, there is a situation of like, okay, I should have known that, but but I wish I would have known that, and
Mhm.
it's like, and it's like, the pitfalls that you'll face that maybe someone else doesn't face is, really unfortunate because it could have been learned. And so
Mhm.
we kind of have to become the mentors, we have to become the coaches and the teachers. And that's why I thought this was a great conversation to have. So we can start becoming that and really spreading the word that the education, that guidance counselor, so many people need that. So
Yeah,
many people need that guidance counselor throughout their life.
absolutely.
We so what
Yep.
what are what are some of the things that you're actually doing right now, just within your community that are spreading the word? What are you actually doing?
I go to networking events, a lot of realtor events, and just holding PBRs, like private parties, to share and spread the information. Um, Also, just connecting with people on social media. It's a lot of different ways that I get the word out to people and letting them know what I do.
Exactly. I'm curious, and we can talk about just some of the marketing aspects of it. What is type of responses that you've been getting when you're out there promoting, what you're promoting?
A lot of times we get, I don't need that. And we know that there are over 43 million Americans that have a credit score of 699, right?
Hmm.
So we know they're out there. And a lot of people don't like to tell their business, which is okay, But if you have someone that you could come to for help, so I just try to, just share it so that they know that there's a resource where they can come for help.
It's funny. It's You have an opportunity to help someone, but if they're not willing to help themselves, there's
Right.
really nothing you ultimately can do. You know,
Exactly.
you have to kind of stand here and say, "Hey, I'll be here when you're ready."
Hmm.
And just know that you can be that beacon of light when they're ready to want the information, but you can't force feed anyone. They have to commit and want to be in a better situation. um, we were talking about this a little bit yesterday, and it's a concept that's kind of running through my head. But the economy and the growth of the world, we can all Google it. You can Gemini, Chat GPT. The growth,
Perplexity,
yes,
OpenAI.
yes,
Come to
wherever
the
you
show,
want to
listen
go.
to Dante, right? Come to the
Yes,
show, listen to Dante, right?
wherever you want to go. But the reality is, life is moving forward and continue to get more and more expensive. It's almost a false reality if you think it's going to go back. Like,
Right.
we're not going to go to $2.50, Happy Meals. We're not going to go to
No,
50-cent gas prices. Like, that's gone. That ship has sailed. It's going to be an expensive, country to live in. It's going to be a great
life is
country.
life is expensive, right?
100%.
99 cents at Wendy's has been gone for a while,
Correct. So
right? The
we have
dollar
to.
20, the $1.29 meal at Wendy's has been gone for a while too, right? I mean,
Yes,
it is
sir.
what it is.
And
So
everything is
we
going up but the pay. So what do you
exactly.
do? What do
So
you
so
do?
we have to adjust. I feel like we have to adjust, and that's why we're in the real estate space. Real estate and market. With mortgages, we're helping people invest into properties, fix and
Mhm.
flip. We're doing renovation loans. We're helping people, obviously just buy a house, right? So they can over time increase their appreciation. We're seeing appreciation right now, roughly about 4% year in, year out. So
Mhm.
that's almost like a forced savings account for some
Yeah.
people.
Yeah.
So even if they just get a house, it's like, okay, well, you're doing all this fancy stuff, Dante. You're doing all this. I'm not too comfortable. I'm nervous, risk adverse, whatever the case is. Just buying a house is almost a forced savings account.
Mhm.
And so I just wanted to get your opinion on some of the things. What can we do about the income struggles that we're facing with this, expensive market?
Like you said, purchase a home, get into um, building your own business. I don't care if you cook, write, sew, bake. Set yourself a LLC up. Set yourself a business, right? and do something outside of just the 9 to 5, something that you can have that's your own, that you can build on. That would be my best suggestion, you know. And like you said, purchasing a home. I think a lot of people their first step is purchasing a home because it's something that's theirs, and they know that they can build equity in, right? And
Exactly.
equity, like you said, is a savings, you know. I think a lot of people are scared of building businesses of a failure. You know what I mean? They don't know about businesses. They don't know how they run. So they don't look forward to doing that because they don't want to fail. Okay. But all successful people fail. That's how they get through to things. If you don't start, you don't have anything. You got to get started. You got to try something. You got to make a change.
Failure is not
Got,
trying.
Right.
gotta take a chance. Gotta
Yep.
take a chance. We said it a little earlier. Our version of buying a house is different than what our parents is. The perfect example is you need 20%. Nope, you don't. Go ahead and buy the house, right? That's the change, right? We've been in this business for over 20 years. We've experienced that now where it's common to understand you don't need 20% to buy a house. Like that old routine of that is gone.
Mm-hmm.
Yeah,
Right.
I mean,
I think that,
that's supposed to help people. I mean, the reality is, no more 20% down. FHA and VA opportunities. It's really one thing I like about Grant Cardone, especially in the real estate space, is, he was one of the first guys that really kind of promoted, at least to me, offense, thinking offensively and being aggressive in how do we make more money? What's a way to win versus, obviously the Susie Ormans, the Dave Ramsey of the world, where, I just felt more defense, control your spending, create, disciplined habits, eat ramen noodle for, 2 years if you have to. I mean, all that's great stuff. And I do like it. And I think there's a purpose of it. But at the same time, I think more people need to think offensive minded. They need to get a little bit more aggressive, to your point, starting a business, making, hey, what do you like to do? And I always use my brother as an example. Like, this guy was working at an insurance company in Chicago, working 9 to 5. But then when 5 o'clock was done, he went to his second job, which was his passion, being a comedic writer and, doing skits and all that stuff. And it's like, wow. And he's working his craft from 6 to 11 o'clock at night. That's a full day, and so that's a guy saying, hey, yeah, I understand. I got to pay my bills. I'm going to get a job, but, my real passion is this, and I'm going to put the time in. So I think people need to commit to that because the train is gone. I just, sometimes I'm looking at these people like, complaining, disappointed, the blame game. And I'm like, well, folks, it ain't going back there. You got to catch up.
Exactly.
Yeah. You got to do something about it.
You got to do something about it. Like, okay, all right. So you're right. I agree. Some of the stuff I hear, I agree with you. But we're not going backwards. We have to move forwards. And so how are you going to get there? So we got to have strategy. I feel like, moving forward, strategy is going to come to play. Now, I always, when we have people on, we have to talk about AI because that's the new sexy thing in the room. What are you doing with AI? What do you think about AI? I mean, does that replace us? That replaces what you're doing? What's your thoughts?
Yeah. For me, I think it does. One, because a lot of people can go on the internet and look up something and find out information about it, right? And that's great. But if you don't know how to implement it, okay, knowledge is power, but applied knowledge is powerful. So you can get all the tools you want, but if you don't understand it just by Googling it or looking it up, if you don't understand it and know how it really works, is it really good? It's a start though. Don't get me wrong, it's a start. And absolutely, I think in a lot of places it's replacing the human. You can tell by the fintech, you can tell by the kiosks at Walmart, McDonald's and self-checkout lines at Walmart. That's eliminating cashiers.
Yep.
The banks, you can take a picture of your check and deposit now. That's eliminating tellers. So yeah, it's taken away from a lot, but at the same time, it's not really that good if you're not educated on it, right? You can get the information off of AI, but if you don't understand it, who's gonna go on AI and type up how to get a good credit score and then actually go through the processes of finding out what certain words mean? Not too many people.
Sure.
You know?
It's interesting. I had a conversation with a loan officer last night, and Vince, you'll enjoy this one. And the loan officer said, in 10 years, the mortgage broker is dead. Looking at our AUS or our new LOS system, how it has the ability to calculate income, right? So, Keir, if we took an application on you to buy a house, we could just literally type in the stuff, and the calculations are already working on our behalf. No longer do we necessarily need a calculator in hand.
Mhm.
And he's like, man, this is going to replace us. And and I said, no, it won't at the end of the day. But I also said, think of TurboTax.
Mhm.
I
Mhm.
mean, there's a faction of people that use TurboTax every year, millions of people, and it's a successful opportunity and direction for people to go who have, pretty cookie cutter, simple situations. An employee got a W-2 job, nothing else is going. But look at the others that have complexity, have multiple properties, stocks, bonds. They need strategy. Like, hey, I owe the government $30,000. How do I, what do I need to do where I can owe only $0? What do I need to, structure?
Yeah.
You can't get that from necessarily TurboTax per se. And I look at that as in the mortgage space, the same way, where it's the strategy, it's the
Mhm.
expert that really can help you, structure out situations for the betterment of you is going to always stand out. What's your opinion on that, Vince?
Again, you hit it. I mean, we're in an industry that, regardless of AI, I'm still going to sit here. It's still people business. It's still a relationship business. So it is what it is. In our generation, AI is just going to be easier efficiency. It won't replace us yet. In time, I figure it will be in time. It's just the replacement is just going to be a redefinition of the role, and that's across everywhere. But the
Sure.
people interaction still needs to be there.
Mhm.
Yeah, well,
I
we'll
can't
probably,
stand talking to my bank telling me your balance is this, press this for this, press that for that. I mean, granted, I use it, but I can't stand it.
Or when they put you on hold, say someone will get
Correct,
right with
right?
you.
Right.
and they never
Or,
do.
you're calling me in your voice and you didn't pick up the phone. You didn't say hello. You're just calling. It's a robocall. Oh, please hold until someone gets here. No, I mean, we're done, right?
Right.
It's
Yes.
just the way the world's going to go.
Mhm.
Yeah, I mean, obviously the kiosks, I was thinking of Target. I'll be there later today, and how, 3 or 4 different lanes are just all, self do it yourself, and they only have 2 open lanes with a human being and stuff like that. And so, yeah, it will minimize people that don't have an expertise in something for sure.
Mhm.
So that's where, excellence and being successful, even though those are subjective words, you have to be excellent in your craft. You have to really stand out. And that's difficult to do, obviously, with just the nature of fluidity that we have with so many people, right? We're
Yeah.
just inundated with so much noise and going on. So who do I listen to? Should I listen to you? Should I listen to him? How do you really decipher, or how do you differentiate yourself just within the community? Because there's so many people, saying, well, come listen to me. I'm the one that's got the information. How do you differentiate yourself?
So I just really make a good connection with people. I don't necessarily go out for the business. You know what I mean? I make genuine connections. I get to know a person, find out about them, see what their goals are, see what they're looking to do, and then go from there, give them a strategy from there. A lot of times it's just making good connections that allow you to get referrals or people to let people know who you are and what you do. They might not need it, but somebody else might need it. So it's just really, for me, just making connections with a lot of different people in the community.
That's awesome. Keir, can you give your contact information for everyone that's listening?
Yes. So my phone number, you want my phone number?
Yeah, phone number. Where do
Okay.
they get in contact with you?
Okay. So my phone number is
How do they get a hold of you? That's it.
805-294-0088. My email is 𝐂𝐈𝐍𝐿.NOVE@gmail.com. And I'm on Facebook under Keir Young. Under Instagram, I am Keir Young. And on LinkedIn, Keir Young.
Awesome. Yeah, it's so funny. All these platforms, I call them playgrounds. And so, if you want to catch people, you got to be on all these different playgrounds. And so I'm this handle over here, I'm that handle over there. So it is always kind of funny, but that's what you have to do nowadays. Everyone's on different platforms. Everyone likes different social media sites. What's your go-to, Vince? Where can I find you?
Well, you guys can always reach me at vince@epic.mortgage or 708-359-8578 is my cell phone, 708-359-8578. And speaking of social media, yesterday's show, we made a quick little plug for my new project. And we had about 300 likes to the page. I don't know if that's from our audience. And we got about 15 new followers. And we're sitting at 91, but I gotta get to 100. So the end of the show, I'm gonna plug it again.
Can you plug it now, and we'll do it 2 times?
Please unfreeze yourself.
I'm good.
We're gonna have to do it again. So
that's awesome, man.
You were frozen, but I know we're at our half hour mark, so I'll let you get started.
We are at the half an hour point, so we will start our housekeeping notes. This episode today is sponsored by Epic Mortgage. Whether you're buying, refinancing, or purchasing, call Epic today. That's 708-905-5300, 708-905-5300. It's your dreams, your goals. Let's plan together. Now, if you are looking for a blueprint, a play-by-play, a step-by-step playbook that can help you and guide you to buying a house, I would recommend checking out my book, The Ultimate Mortgage Guide. It's available on Amazon. It's a book that really I wrote because of the concept that in 2002, I was getting questions, and that were great questions on how to buy a house. And then in 2023, when I was writing the book, I was still getting those same questions. And so I understand that, ultimately at the end of the day, the market and, it's just not there. It's not, you're not being supported. Your answers are available on the Ultimate Mortgage Guide. So I want you to check it out. After the show is over on YouTube, I want you to go to the Epic Spotlight channel on YouTube. I want you to listen to our most recent episode. It's called Martha Allen. Martha Allen is a remarkable figure dedicated to guiding both established and aspiring couples on a transformative journey toward fulfilling relationships. Her approach centers on 3 key pillars: faith, finance, and foundation, offering couples a tool to build a long-lasting relationship of love. So had a great conversation with Martha Allen. When you have an opportunity after the show is over, please check out the Martha Allen podcast. It's available now. All right, we have some preferred listings. We have, let's start off with Simbay. We got our Jacksonville, Florida properties, new construction, 12673 Simbay Court and 12707 Simbay Court, Jacksonville, Florida. Both respectively are going for $374,990 and $378,990. These are 4-bed, 3-bath homes. Contact Charday Nix 904-520-8041. We have our condo, 548 East 50th Street, Unit 3, Chicago, Illinois. It's a 3-bed, 2-bath, going for $269,900. Contact Jessica Roberson at 708-518-8120. We have 16029 Circle Drive, Markham, Illinois, going for $109,900. It's a 3-bed, 1-bath. Contact Keith Terry, 773-655-1360. We have 412 North Ridgeland Avenue, Elmhurst, Illinois, going for $410,000. It's a 3-bed, 1-bath. Contact Laretha Lowry, 708-670-8165. And we have 13827 South Wentworth Avenue, Riverdale. It's back on the market. It's going for $150,000. It's a 5-bed, 2.5-bath. Contact Amico Pope, 312-600-7673. All these properties are available on my website, www.danteroyster.com, so you can actually look at them there. What this means as a preferred lender is we know the listing agent. So when they see our pre-approval come across their desk, you are more likely to actually get that offer accepted. So if you are looking for properties, if you're looking for help, getting pre-approved by Epic today is the right thing to do, and we can help you get that dream home for you. All right, we got some questions over here, which is super cool. Always appreciative. Once again, if you have questions or comments, put them in the chat, put them in the comments section, whether you're on Facebook, whether you're on LinkedIn, whether you're on YouTube, go ahead and do it. Right now, we got about 418 people today listening right now, so appreciate that. And let's go here. Damien writes, amazing insights. How can beginners start improving their credit today? What would you say, Keir?
I say, well, start by connecting with somebody that can help you get on track. Me as myself, as I gave my information. Also, just to take a look, pull your credit report and see exactly where your credit is. That's the first thing. See what's on your credit, see what your credit score is, see where you are with it, right? And then, someone can help you start to get those things implemented and getting your credit together.
Awesome. And once again, I always like to tell people, hey, the credit scores that you see are not the actual credit scores that we're going to use. We have to pull your credit. There's different criteria when we pull credit versus the Credit Karmas and whatever else, different platforms people are using. I don't know why they get those scores, but
thank you
found
for
that
that
out.
disclosure.
Isn't it
Because
because
cards?
Go ahead.
Please go ahead.
I think it's a different between FICO and Vintage. Isn't that the difference between the two scores? Is that why you guys pull different from like the regular deals? Or
I mean, Vince, you got the technical.
Yeah, I mean, I don't pay too much attention to the Vantage score. I mean, I know it's a new concept for us, but it's not really being viewed yet. As far as any of the Credit Karma and all the other stuff that are services or the credit score you get for free on your Discover card, I mean, I stay away from having even conversations about that. Like it's helpful, but it's not the real truth. And at the end of the day, you need to talk to a mortgage person or a credit person and run through it. You can always get your credit pulled free through the freecreditreport.com websites by going directly to the credit bureaus.
Yeah, so I mean,
so I'm dodging that question a little bit, Dante.
No, it's fine. It's so from my vantage point is the bureaus know who's pulling your credit, and so there's different criteria when your credit is being pulled. And ultimately, there's 8 different scoring models out there. I mean, it's kind of ridiculous, but I mean, that's another topic for another day. But there's 8 different scoring models. So in theory, if you're going to get your credit pulled because you're buying a car, you'll get a certain type of credit score. But then you'll get a certain type of credit score if you're buying a house. So it does vary based upon that. So a lot of times people will be like, well, I saw my credit report and I was a 678. Well, you're 634. Well, why is that? And it's like, I'm not trying to lie to you here. I mean, that's what the score is. But understand the criteria is based on me being a mortgage lender. They're trying to hypothesize to some degree or trying to guesstimate what your score may end up being. Hopefully you're not paying for that service because it's very misleading. And so if you're just getting something. Now, one thing to note is if you were a 680 score on your platform and I'm a 640 on my platform, and you say, hey, I see that my score went up. Well, guess what? If your score did go up, it will go up on mine as well, because obviously something changed to better your situation. So that could be something you could reassure yourself with, but the actual score is always going to be different.
And another thing is a lot of people think they have like a good credit score with the 680 because, that's the average where you can purchase a home or get a good credit card or whatever, but they don't take into consideration of what is on their credit as well. People come to me and say, I have a 700 credit score. Why can't I get approved for it? What do you have on your credit? It's not just your score. It's your debt to ratio. It's how much credit you have. It's your credit history. It's a lot of factors. So that's another thing I wanted to share.
Awesome. Go to the next one.
And don't buy the car while shopping for the house. Let's remember that, please.
Yeah.
Oh, well, now this is truth. This is factual. We have a closing today. And Mr. Williams, thank you, Mr. Williams. Congratulations. He's about to be a homeowner today. And he said, Dante, now when can I buy the furniture? I said, buy it after it funds, my man. He said, oh, okay. Yeah, once it funds, you can go get it, but not before. Do not rack up any wherever you're going to buy at. I don't even know where you get good furniture nowadays. I don't know. But yeah, funny. He literally just asked me that today. So I was like, oh my gosh, no, don't buy anything right now. Wow, Keir's tips on wealth habits are gold. Can you share more examples? Oh, thanks, Dirk. That's very nice.
Yes, thank you so much. Wealth tips. Well, you have to have a good mindset. You have to change your mindset and to know that to you, for you, right? A lot of people feel like, oh, I don't have a good job. I don't make enough money. I ain't going to be able to pay these bills. No, if you manage yourself right, you can pay your bills. If you manage yourself right, you can have things. You have to start putting money aside for savings and things like that. You can't just take your whole, my motto is I don't work to pay bills. I work to live and enjoy myself. So I'm saving as well as paying bills also, right? And that's what people need to start doing. Even if it's a little bit, you'll be surprised at how much it builds up over time, just putting $25, $10 into a savings, right? Especially if you have a savings that have a high interest, like high yield savings accounts, that have anywhere from 3.8% interest up to 5.0% interest. A lot of people don't know about those, but just, making a plan to say, I want to do something different. I want to do better. I'm not going to just live paycheck to paycheck. I want to start putting something aside each pay period after I pay my bills and take care of home, right?
Love it. I love accountability partners, finding people that, have the same like mind and hold each other accountable. Back a couple of years ago, I forgot, I was working with a client and she showed me this like $10,000 plan where it was like showing like $1 a day, or day one $1, day two $2, and before you know it, in a year's time you saved up $10,000. Just showing you little tricks that just to play with your mind. Like that's all it takes today is go find that loose change and put it together.
Yeah.
Go ahead.
One other one: keep your 401k balance higher than your credit card balance.
There you go.
Right.
There you go.
Let's just get to one, right? I mean, hopefully your employer gives you some free money with it, but even if they don't, you still should put it in there.
Absolutely.
No doubt. Danny writes, what's the fastest way to boost a low credit score? Q, you got that?
With credit builders, self-credit builders, you got Self, you got Kickoff. You can even get a secure credit card, and you can start out with a secure credit card with as low as $300 on it, right? And that's how I started out. I started out with a secure credit card, put $300 on it, just used it only for gas, paid it off before my statement date. And after 6 months, I was offered a $1,000 credit card. So, that's a way. You can also use rent. If you rent, you can add your rent up to 2 years on your credit report. That's one of your biggest bills. A lot of people don't know that.
Awesome.
So those are a few.
No, I appreciate that. And David Darnell, thanks for listening, David. I think you're a first-time listener. What can you explain how interest rates affect credit scores?
Oh, absolutely. If you have a low credit score, your interest rate is going to be super high. And not the good thing, but the one thing about it is car dealerships are good for that. Okay. They will give you a car with a 425 credit score, but your interest rate would be super duper high. Okay, like you'll pay 3 times the amount for the car that you're actually purchasing.
Awesome. Yeah,
And
I
I
think
also
that's.
want to say one more thing. We are doing a no credit card Christmas challenge this year with the 𝐒𝐲 savings account, where we have people putting in the amount of that they want to use for Christmas this year and putting it into a savings account, and they're putting it in like weekly or monthly until they get to Christmas, where they have interest growing on it as besides paying interest on the credit card. So that's something cool that we came up with this year. It's working it's going pretty good.
Awesome. Dixon writes, which financial habit makes the biggest long-term difference?
We touched on it earlier, the forced place savings account known as a mortgage payment, right?
Yep.
To me, I mean, but it's a mortgage show, it's a mortgage shop. I mean, that's one of the biggest things, right? If you can't do anything else, do that.
I agree.
Yeah, I mean, that's kind of the bare minimum. I mean, a word would be discipline, right? A financial habit is having discipline.
Mm-hmm.
Long term will pay the success that you're looking for. If you can own a house, obviously just the opportunity of something growing at 4%, over time, if you can give it 20, 30 years, you will see the growth in the valuation of it. And, especially, if you could jump on board now, the average house is about 420,000 nationwide. Mm-hmm. And so, I mean, if that plays out, I mean, that home will be worth over $1 million, eventually.
Let's not get into that, Dante. We can't continue that rate of change, right? Otherwise, we're going to have 4 or 5 people on an application in order to get a loan done. So let's stay away from that theory, that continuation there. Just a little bit.
Hey, I'm telling you, we're not going backwards.
I already got a heart condition. I don't need a heart attack.
I hear it. Next question, Maria. How often should I check my credit report? What do you say, Vince?
I mean, the whole routine of that is once a year, but with today's technology, what's on your credit report. So if it's your bill and it's there, you're not planning on using any credit, lock your credit report up. Let's remember, we didn't get into any of the fraud stuff or identity theft. So let's make sure you guys look at locking your credit report up. And then you don't have to worry about checking it. Like if you're not using it, don't give anyone else access to it.
Exactly.
I like that. I haven't done it personally, but I do like that credit lock, credit freezing. I mean, it's highly annoying.
Oh, it is.
My side
we're not happy about it.
No.
Trust me. No.
It's highly annoying.
Because when somebody goes to go for a credit card or something like that and they don't get approved, they're like, well, what happened? Did you freeze your account?
Yeah.
So let's get that disclosure out there. So when people come to Dante for a mortgage loan in December and be like, Vince told us to lock our credit around the holiday, right? So
just unlock it. Just unlock it before I'm about to go to work.
That's correct.
It's unbelievable.
Unlock it for 45 days and let us go to work, and then you can relock it again in the new year and be done with it, right?
Yeah. So Saturday, I'm pulling the credit, and the lady had her 2 bureaus locked, and then she's like, "Well, what am I qualified for? I need you to unlock the credit. I only got 1 bureau. I mean, you look okay, but I got to see the other 2." Mm-hmm. And actually, thanks to this conversation, I got to call her because I'm still waiting for that 2 bureaus. Like, man, did you unlock it? Can I go to work? So that's funny. All right, next one. What's the best strategy to handle student loans?
Well, that's a big one because it depends on what your student loan is. Is it in default or deferment? I know that the government had a write-off where they did a forgiveness for student loans. There's a lot of people that had that done, but then there's a lot of people that haven't. Me personally, I would say try to find out what's old and see if you can make a plan, a payment plan, or see if you can plan it. It just depends on how old it is and what standing it's in.
Yeah, that's a good one. What do you say, Vince?
No, it was. I'll let you go, but I got two little comments to the student loan. One, consolidate them all into one.
Yeah, that's it.
Try and pay a little extra. And the other thing is, we can consolidate student loans into your mortgage as a rate and term.
Oh.
So let's not forget that in the mortgage market. It's not a cash out.
That's a gem. I didn't know.
Say that again. Yeah, say that again, Vince.
Right.
If I remember correctly, student loans are not considered cash out transactions if we refinance them into a mortgage payment. Right? So now granted, think about it. Can't go over cash out over 80% of the value of the house.
Right.
In a traditional side. So they may have changed the rule. Okay, so could be wrong here. But even if you can still consolidate your student loan into your house.
Sure.
Right? And if it allows you to go up to a higher LTV above 80, you're cheaper by doing that from a financial standpoint over the long term.
Yeah, I would say that too. Yeah.
So again, I may be wrong on the rule, but I believe it was that way a couple years ago. It could have changed. Okay. But remember, if you go over 80, you're going to pay mortgage insurance.
Correct.
So you wouldn't want to do that if you were going over there anyway. So it all depends, but everyone has equity in the loan. We've always talked about that. If student loans are getting to be a real pain, you have the equity, you can consolidate into your mortgage.
No, that's super cool.
That's good to know. Yeah.
Yeah, I mean, obviously we have income-based repayment plans that we encourage some of the folks to get on because that we can use that lower payment in order to qualify. So we're still, in a situation where, they're deferred. Well, we have to use 0.5% of the balance on FHA, 1% of the balance on conventional right now. And so that's, that could be a ball buster as far as messing up your debt to income ratios. And so student loans still play a major bugaboo. So if we can get them in a, income-based repayment plan, IBR format, it gives us a better chance to get you qualified, or you might have to be willing to get that, co-borrower or somebody to help you, offset that debt. All right, we got a couple more here. Appreciate everyone putting these messages in. Thank you so much.
Yes.
Great show. Love every minute. Appreciate that, Clayton. Thank you for listening.
Dante's going to take the next question and advertise what day the show is, what time, and how often Vince is here.
Incredible content. How often do you do these live sessions? Well, I appreciate you listening. We do these Monday through Wednesday from 12 p.m. to 1 p.m. Central Standard Time, 1 to 2 if you're on the East Coast, 10 to 11 if you're on the West Coast. So that's a little brunch. But we're here Monday through Wednesday. Appreciate you if you're a first-time watcher or listener. Trying to give you information about mortgages, real estate, trying to stay positive on what's going on. We try to bring different people on, like Keir Young today, definitely giving us some insight about credit and mindset shifts that we need to have. These are great conversations that I think we all should have. So make sure at this point, give this a thumbs up. And make sure you share this with friends and family, and make sure you subscribe to the channel so you can get reminders of the next show. We always try to give title descriptions and give you updates so you know what the show is going to be about, so you have the right expectation. So every show is a little bit different. Obviously, yesterday we were a little bit different yesterday, but we were flowing, and today now we're talking about credit and just what's going on. So appreciate you listening.
You got one more plug. You got to plug the newsletter.
Oh, the newsletter. Well, I'll do that tomorrow. That's on Friday.
I might not be here tomorrow. No, just kidding.
I know. You already set me up for that for yesterday, so I already know this.
I did.
Thanks for breaking down credit myths and mind blowing. Thanks, Roy, for listening today. Appreciate it. We were trying to give this insight, trying to give this information, so I'm glad. I'm glad you like it. And just another shout out. Everyone's enjoying themselves. So I think it was important to have the conversation. Like I said, I had some stats that we kind of went over today as far as credit goes. And I think the 715 number was surprising in one way or the other, depending on how you look at it, right? So if 850 is the best and the average credit score in the nation is 715, listeners out there, kind of where your score is. And you're like, nah, I'm far from that. Yeah. So if you're below than average, now we have to figure out ways to to do better, right? And get you up, because you are paying more in interest. You are paying more fees, just in credit cards, car payments, mortgages. You're paying more when you have a lesser credit score. So what are some things that they could do, take away from this? What would you say are some tips to try to get your score up? What do you think here?
Making your payments on time is a number one. That's good. Not having so much credit either. Like, to have a decent, good credit profile, you only need maybe 2 credit cards, a long-term loan and a short-term loan. Long-term loan being a mortgage or rental, short-term loan being a car or a department store loan, something like that. Don't go over your expenses. Don't go over what you can't afford. If you cannot afford to go in and pay cash for it, then don't go over it. That's just the tip of mine. I know a lot of people like to use credit because sometimes you don't have the money, right? And that's good. You need credit. Credit is something that will build your foundation of, like I said, getting into places, getting into different doors, connecting with different people, right? But don't overdo it. I know people that say, "Oh, I got 10 credit cards." That's not cute. It may seem good, but it's not really cute. All you need is a department store card and maybe a major credit card, or a secured, credit card and a major credit card. And then, like I said, like a car loan and a mortgage. You don't need a whole lot of debt on your credit. Something I wish I knew when I was younger. Okay.
I live in the 3. I always say you should have 3, credit items on your credit. So you could, and ideally, if they're revolving, and it's always the best way to go, because if they're revolving and you use them just once every so often, they will always stay open and active.
Right.
So you want to get away from installment loans per se. I mean, those are cars. So hey, I made my car payment on time, but once it's paid off, there's no
Right.
reflection anymore, and it's a closed account. So actually, your score goes down when you pay off the car. And
Yeah,
so,
tell me about it. That's
so
something
it's
I found out.
yeah, it's crazy. So I mean, the game, like I said, I got 2 decades in this space, and so very fortunate to have learned this stuff over time. And so we're trying to give you this information so you can be successful from day one. But yeah,
Exactly.
it's 3 revolving trade lines. If you have trade lines, are things that show up on your credit report. So utility bills don't show up on your credit report unless you do that self-reporting, like you said.
Or Experian Boost.
Experian Boost is another way you can go. And I've heard of Experian Boost, but yeah, it's so important to just, if you can have 3 credit cards in your name, open and active. If you can, maybe every 6 months to every year, look to increase the credit limits, always pay things on time, always keep things under 30%. That is going to long term put you in the best possible situation, have a credit score. And when you have flexibility with a credit score, you're just open to anyone. You're open to any options. You don't have to bite your nails and wait, will they accept my offer, or oh my gosh, will they approve me? Because we deal with all walks of life. We deal with people that have 500 credit scores to 800 credit scores, and it's and it's sad sometimes. I have a client right now with a lower credit score, doing a refinance, but it's not like, oh, some people have a different mindset of like, oh, well, we're going to still get it done, at the end of the day. But 520, it's like, are they going to accept me? It's deal or no deal. And it makes a big impact in people's lives.
Yeah. Let's touch on a couple things. We want, as Dante just mentioned, we could do credit scores under 580, as low as 500 to 520. You want to be at a 580 or above. Right? That gives us the most opportunity with FHA and get you still in the 3.5% down. Under 580 is 10% down going FHA. With that being said, if you have credit issues and you're about ready to buy a house, don't go paying off old accounts that are collections. They've already affected your score. Talk with your mortgage person and ask them how to handle it best. Because in most cases, we could just pay the percentage of the outstanding balance as a payment and you may be able to avoid paying that in order to buy the house, and you can use that money for other things. So again, it's not the panic button. It's about addressing everything as the opportunities come.
Love it.
I like that.
Bars.
Yeah, I like
Bars right
that.
there.
Yeah, so people do panic because they don't know. They're like, oh, I have a low credit score. I'm not going to get approved. They're not going to do anything for me. But you got to know the right people. You got to know who to connect with, you know?
My favorite quote, and you said something earlier that triggered me, is you have to change for what you say you want, or you have to change what you say you want.
Mm-hmm.
You know, it's just so, you know, we have to be willing and make the conscious effort to change, you know, and if we're not willing to change, then you have to change what you really want, because you don't really want it.
Right. Exactly.
You don't really want it. So,
Mm-hmm.
yeah, our hour is up. Appreciate everyone coming on. Appreciate everyone listening. You know, about 420 people today listening to us. So I can't thank you enough for this great opportunity. We will be back tomorrow. New topic, new fresh ideas. You know, trying to answer questions that you have. You can definitely put it in the comments section. Vince, tell them what's going on in your world.
I got two on. Gary, give them your contact information one more time, please.
Okay, my phone number is 805-294-0088. My email is KYOUNG.NOVE@gmail.com. I'm on Facebook as Keir Young. I'm on Instagram at I am Keir Young, and I'm on LinkedIn as Keir Young.
Appreciate it. Thank you very much. And for me, I took the glasses off for a reason. Everyone, when you get a chance, go to the Let It Rip with Vince page and get me to 100 followers. And the reason I took the glasses off is because on that profile, there is no picture of me. It's just a guy with a hole in his chin and big eyebrows. So you guys can see the difference. Thanks. Appreciate the audience. Have a good day. And maybe I'll see you tomorrow, Dante. We'll see how that goes.
We'll see how it goes. I will be
Thank you
back.
for having me.
Oh, not
really
a problem.
Enjoyed.
No, you know, and this is to your point, networking. To me, this is where networking really begins, because we have a live audience actually listening to the conversation. We have a chance to actually speak and, you know, see what you're doing, see what I'm doing, and then, you know, and we see if we can work together. So thank you so much for joining us today. It was great information. And that 805 you got me, is that Alabama?
No, it's a California number, but I'm in Chicago.
I got you.
It's a long story for that.
I got you. That 805 was throwing me off. It's like, where is she from? Where is that?
Awesome. That's Sacramento, right? 805?
Somewhere around in there, yeah.
There we go. Look at Vince.
Wow, I spent a little time in Cali over the years.
Oh, my brother would be mad at me. All right, guys, take care. Have a great day, and we'll see you tomorrow.
Sounds good, everyone. Take care. Thanks.